Okay, in this interview, we're talking about what you now know, I believe, might be one of the greatest investment opportunities that is still out there today, even after a fantastic run, and that is uranium. So today we have a very special guest. Now, first of all, he is the CEO of Bannerman. Now, that is a publicly traded uranium company, but what's most interesting about our guest, Brandon, is he's also co-chair of the World Nuclear Association. So the depth, and he's also aids even with the United Nations, as he was saying. So we're talking to someone that is really one of the foremost researchers into the uranium markets, the needs for the uranium markets. And so it's a very interesting conversation, and the depth of his research, I think, is pretty much unmatched in the industry. And so going to be an exciting topic today. Now, please make sure that you hit the like button over on the right side, right over there, and the left side right over there to send this out to more people. We'll get uranium spot price predictions in the comments right there down below. And then last but not least, just a shout out to our channel sponsor, which is Visa Silver. So thank you, Visa Silver, for being our channel sponsor. And it's good to see you, Brandon.
Yeah, great to be on, Jake. This is exciting.
So, like I said, you're a really interesting guy because you're not just the CEO of a uranium company, but you really have your hands and your whole energy very deep into a lot of what's happening in the world in the future with uranium. So, give us an idea, first of all, of why we are seeing equities moving and where you think this uranium market is headed.
It's interesting because what we've got at the moment, Jake, as you've observed, is a situation where equities are starting to re-rate after really being in the shade for a long time. And that's moving ahead of fundamental macro situation. In other words, equities are moving without the spot price of uranium moving. And that's not an unusual situation coming out of a long drawn out bear market. And for people who are just joining the uranium story, we've been in a bear market since the Fukushima accident all the way back in 2011. And that's had a number of effects, as bear markets do, but uranium's a bit special, as we'll talk about, and that's elongated the bear market and made it unnaturally deep. So equities have had a bit of a lift in the last couple of months, and that's been great for investors who are already investors. And it's been a bit of a wake-up call for people who thought they'd be able to time their entry into the sector. And many people that I respect are telling me that this is really the last pause that we're going to see in equities before the bull market takes effect and we start to see a fundamental re-rating to value. So I think in equities, they're really starting to get re-rated to where they should be rather than where they've been, which is beaten up, down in the doldrums, depressed, all of those terrible things that happen in the natural cycle with the bear market that have just been exacerbated by the particular features of the uranium market.
So you got to give me an answer here to this really interesting conversation, which is to your average person when you discuss uranium. Of course, there's these very genius investors in uranium that can tell you everything about it. And those are probably some of the more of the traditional interviews that you do. They're brilliant people. Me, as more of a layman, I got very interested because of the supply demand story. It was so black and white. And, you know, at the March lows, these prices were so cheap. I heard the Rick Rule, folklore story of how great the last one was. And then seeing closures and mines, it was a very compelling conversation. But when I address it to, some of my other friends that are investors in whatever, whether it's silver, whether they're invested in cryptocurrencies, people doing well in business, smart people, successful people. And the common answer is there's so much more supply than you can ever imagine. And, Russia and these people, they all got so much supply, it's almost like a fool's gold type of market. And now you're seeing another class of people, or I am as someone that is getting a lot of comments on interviews and such, where people say, it's going to pull back 90% because the spot price isn't even moving. Clearly there's way more demand. There's way more supply than people are saying because the spot isn't moving. So give us an idea of really what's going on in that spot market. How close to a real supply type of squeeze are we? And kind of give us your thoughts on that comment.
So I hear those comments as well. And I think the first thing to understand is you can't compare uranium inventories and stockpiles to copper, nickel, zinc, insert commodity here. And that's really because this sector has always operated on a large number of inventories on paper. But when you start to peel back those inventories, you realize that the vast majority of them are sitting there as, for example, government strategic inventories that simply don't move. It's like pointing to gold that sits in central bank and saying, aha, this is going to flood the jewelry market. But it doesn't work like that in uranium. And then a lot of it sits in the actual fuel cycle. So it takes a couple of years to go from drummed yellow cake that leaves a mine site to the fuel rods that are capable of going and being delivered at site at a nuclear reactor. Now, that's 2 years worth of inventory that sits in that fuel cycle, but it still gets lumped into the years of inventory type argument that we sometimes see. And then utilities need to hold inventory because they have to mitigate their number one operating business risk, which is running out of nuclear fuel. So they naturally hold reasonable amounts of inventory so that they cannot find themselves with a multi-billion-dollar nuclear reactor that can't run because it's out of fuel. So that's the first thing to understand. Inventories are their own beast in uranium, and you need to kind of understand how that works. Now, how does that relate to the spot market? Well, at the moment, there isn't a lot of action in the spot market. Volumes are very low. So if I throw a few numbers at you, last year, circa 90 million pounds went through the spot market. In January, there was only 2 million pounds traded.
Wow.
For the whole month. So we're well down on what it normally is. And we had a little bit of activity in February because of a couple of things that are happening structurally with Metropolis Works facility. That's a conversion facility announcing that they would restart. But for people who perhaps aren't following the sector in that much depth, we're back to about 600,000 pounds going through the spot market last week. So we're back to a very low ebb in the spot market. And what that really means is that buyers, for various reasons, are holding off right now. And you always have sellers who simply need to move their material because, for example, they're a mine that sells into the spot market and they can't hold off for 3 months saying, oh, prices are going to get better because they've got to pay people in the meantime, etc. So in a real simple terms, that's what's going on in the spot market. So it's not representative of the underlying fundamentals in the market, and it shouldn't be used as an indication of price discovery as we stand today. So I would encourage people to give it some time to see the volume start to pick up, see some genuine demand and supply dynamics, and then we'll start to achieve a degree of price discovery.
So give us an idea. Please go ahead.
Yeah, so look, the final point I was going to make, Jake, is uranium for new investors or people who are comparing it to crypto returns and all of that great stuff. Uranium's not a sector that's easy to time. You're better off doing your work as you've done, taking some positions, perhaps optimizing those positions with volatility, but it's a sector that really rewards conviction and patience, as we saw in the last boom and as Rick Rule can demonstrate quite spectacularly with his experience. And at a much smaller scale, I had the same experience during the last cycle as well. So it rewards taking positions, having a high conviction view, and then being patient. And one day, probably for the reasons that you would never have expected and I would never have expected, the sector starts to develop some momentum. And it is famed because of its recent history before Fukushima for delivering that volatility. And that's when it'll take everyone by surprise, and everyone, those investors who are sitting on the sidelines saying, yeah, but I'm just going to watch carefully because I'll get it right. That is a great way of being left on the sidelines with a big dose of FOMO.
All right, so you got to give us the insider scoop in the World Nuclear Association. You're talking to so many people, and you're really seeing behind the curtain of the industry a lot more than probably almost everybody. No, you got to give us an idea when you say the spot price isn't reflective of the supply and demand of the market. Where are we at? You said that a lot of these buyers are for whatever reason are holding out of the market. If it's such an essential commodity, why are they doing that, and how much longer until everyone's thrown out these 50 to 60 numbers? I've heard you say Bannerman needs about $60 to come online spot price. So where are we at with that?
Yeah, look, my position in the World Nuclear Association's obviously a great privilege. And so I'm the co-chair of the demand subgroup. And what that really means is it's a working group within WNA that's tasked with determining the nuclear fuel and uranium demand profile from here out to 2040 globally. So we spend a lot of time looking at individual markets. We spend a lot of time looking at the trends. And we've got quite an active committee that I co-chair, which includes some of the brightest minds in the fuel cycle and the brightest minds in nuclear economics around the place. So that's great. And in those conversations and in the other things that I'm doing at WNA, it does enable me to perhaps have a better view on the sector than what I would get just consuming public information, for example. So that's helpful. Look, one of the big dynamics that we've seen in the last year is fuel buyers, in other words, operators of nuclear utilities, they've had their hands full with very pressing and urgent and at times very challenging issues to deal with COVID. And they buy uranium, as I've said before, on about a 2-year cycle. So whether they buy this week or next week, in a flat market as we've got at the moment, doesn't really matter to them. And that kind of extends into, well, whether we buy this month or next month doesn't particularly matter because we haven't seen a big price increase. And so what that means is that they're focused on solving more pressing issues. And there's been a raft of different things that have presented themselves during COVID. And as we know, in a lot of the key markets, including the US, that COVID challenge hasn't fully dissipated yet. So that's been, from a utility point of view, really the not only the simple explanation of it, but the real explanation. It's just not a priority to be buying right now. And then some of the other market participants, such as traders, they're not particularly active right now. And financial buyers are becoming more active. And we've just had the news in the last week that Yellowcake is exercising its option to acquire £3.5 million from Kazatomprom, plus topped up the kitty with another $30 million in their raising, which gives them the capacity to buy another £1 million on market. We will start to see that dynamic, and maybe we can talk some more about this today. And then finally, the other big buyer in the market that we've seen over the last couple of years are, ironically, producers. And that's where uranium gets really special. The 2 largest producers in the sector happen to be, over the last year, 2 of the buyers in the sector, and predominantly Cameco. So we've got a situation where the 2 largest uranium mines in the world are both on care and maintenance, one for economic reasons, and that's MacArthur River, and one for COVID reasons, which is Cigar Lake, both in Canada. And Cameco, the second largest uranium producer that's listed on a stock exchange, is producing no pounds. It's getting some pounds from its joint venture in Kazakhstan, but it's producing no pounds as a primary and attributable producer. So once we see any one of those areas of demand in the spot market become motivated to buy now rather than next month, that's when we'll start to see the beginning of a price discovery process. In the meantime, well, we just need to be patient and let all of these challenges wash over.
Okay, so I got to ask you, on a scale of 1 to 10, 10 being an absolute and 0 being an impossibility, where do you rate the possibility that you said a moment ago, some financials getting more involved? Where do you rate the possibility? Because I think if I was a multi-billionaire and you were a multi-billionaire, I'd probably Skype you up and I'd say, hey, let's go buy all the spot uranium right now. This is going to be fun. We're going to make an absolute killing. Where do you rate 10 being an absolute, 0 being an impossibility? How likely are we to shortly, maybe even here in 2021, see some hedge funds and big institutions start to front run that?
Look, I think it's right up towards the end of that scale, the 10 end of the scale, not the 1 end of the scale.
Right.
And the chance of it occurring at some level is just about a 10. And the question then becomes, well, to what extent? And we've seen some chatter in Wall Street chat groups, and I've experienced it in my private conversations, that I believe what's happening at the moment is we are seeing those types of groups positioning themselves for the impact that would have on the price. And that means, when I say positioning themselves, well, if they, let's say that you're a billionaire and I'm a billionaire, so we're fast forwarding only a few years, let's hope. So let's say that we're both wealthy investors and we've got a plan where we're going to put down between us 100 million in the spot market, and we're going to maybe not try and move the market, but time it as a catalyst to give all of those other buyers a reason to buy this month, not next month, and therefore create a bit of a snowball. Now, if we were to do that, well, you and I'd be sitting down and saying, well, we do that, maybe uranium prices, it's going to precipitate an action where uranium price needs to double over a fairly short period of time. And I say precipitate because that needs to happen for a whole bunch of different market fundamental reasons. But, by throwing 100 million at the problem, we think that we can just make it happen a little bit sooner. Now, doubling our money, that's a pretty good return, considering that the downside from where we are is very limited. And that's the whole asymmetrical aspect to this market. But we'd be chasing leverage returns on that. So we'd then be figuring out, well, how do we get a leveraged secondary response to that precipitation? And that comes in the form predominantly of equities, but also potentially in royalties and other mechanisms. And another feature of the uranium sector is it's very infantile in terms of derivatives. We don't have many financial instruments at our disposal if you're an investor looking for leveraged returns here. And so you and I, we'd be giving ourselves time to get fully positioned in the stocks that wouldn't just double as uranium price doubles, but would go up, call it tenfold. So that's, I think, what we're seeing at the moment. And that helps to explain the disconnection between an equities re-rate over the last couple of months and the fact that the spot price hasn't yet moved and is in fact just drifting and going down a touch. It doesn't fully explain it. Of course, there's lots of other buyers in there, and interest precipitates interest and so on. But that's why I feel very confident to say that there is an involvement by financial investors in the sector right now. And the question just becomes, well, to what extent and how quickly, and how much of a catalyst does it have on the rest of the spot market?
Brandon, you say that so casually, like I'm pretty excited, and it makes a lot of sense, right? If you're going to go in there and move the spot, it makes a lot more sense to get your equity positions before the spot moves. And so that's pretty interesting. Now, let me ask you, what is the most, or some of the most fascinating things? You said you're working specifically on the demand side out to 2040. What are the most shocking, fascinating, mind-blowing, bullish, interesting things that you've found in your research with regards to that demand side up to 2040?
Look, I think the two things that really excite me, first of all, I think we're right on the cusp of a new nuclear renaissance here. And we're now seeing, in a broad way, the policymakers of all of the world's largest economies committing to a net zero position, in most cases by 2050, and China by 2060. Now, when you've spent as much time as I have looking at not only nuclear economics, but the economics of energy generally, and before coming to the nuclear industry, I worked in renewable energy. I've worked in the battery sector as a chairman of a company that aspired to produce vanadium redox flow batteries and so forth. So I've had the opportunity to get a pretty good grip on not only nuclear, but nuclear's competitors. As these economies get closer to that D-Day where they've committed to net neutral, nuclear becomes not only a politically acceptable, but a fundamental physics and economic reality that it must play a bigger role. There's just simply no way that most of these economies can possibly achieve a net neutral outcome without nuclear playing a much bigger role. And what happens with public acceptance and politics is these things tend to lag what we can predict from an economics point of view and from a technical or a physics point of view. But then they happen all of a sudden, and they happen very, very quickly. And we saw that with climate change and, say, for example, the influence of Greta Thunberg. That was something that happened very quickly. From one year to the next, there was a huge amount of interest and conviction about climate change amongst a particular demographic who are now the voters. She's now a voting age in most countries. That will happen with nuclear power, and I think we're on the precipice of that. And there's many different indicators that you can point to, which I believe are leading indicators that are both not only convincing policymakers, but enabling policymakers to be a bit more bold in the way that they talk to their constituencies and the way that they talk to their voters. And that corresponds with, I think, a reality check that we're starting to experience on renewables. So renewables unquestionably have got a big role to play in addressing climate change and achieving net neutral. But I am a long way from buying into some of the optimistic rhetoric that we can be certainly 100% renewables, but even majority intermittent renewables. It just won't happen in the time frame that we've got. There aren't enough natural resources on the earth that can be mined in the next 20 years to achieve the sort of storage that would be required for most grids to even approach 50% intermittent renewables. So that is a realization moment that is happening behind closed doors amongst many policymakers. And for the most part, they're feeling constrained in talking openly about it. It's still a little bit taboo to criticize the potential role of renewable energy. The lobby group is still very, very strong. And once it becomes more acceptable, once it's been permitted by perhaps a few more disasters like we're seeing in Germany with the Energiewende, that's when we'll start to see both nuclear come to the fore as being able to play the bigger role, and renewables placed into what is a more realistic and a more sustainable expectation set as to how they're going to deliver their part for a net neutral economy by 2050. So that's the first thing. But maybe you want to comment on that.
No, please go ahead.
So the second thing that's just mind-blowing is what needs to happen in China. So China, very large economy, as everyone knows, 65% dependent on coal. And over and above their bilateral and multilateral commitments that they've made to decarbonising and addressing international treaties, the Chinese leadership have made a promise to their people that they will make the skies blue again. China is sort of going through what many Western economies went through during the first industrial revolution. And it's the pollution in various forms has been a cost of their dramatic economic growth. And to a degree, it's been accepted as people move out of the poverty sphere and start to urbanize. But now, for a large part, their constituency are not willing to accept growth if it comes with that degree of pollution. And so the skies will be blue again in China. And then what you do is you look at their economy and the structure of its energy economy and the fact that it's still growing rapidly and will continue to grow rapidly between now and 2060. And you say to yourself, well, the only way they're really going to make the skies blue again is by making a big dent in that 65% coal. Where's that going to come from? It can't come from intermittent renewables because they will be flat out just meeting the increasing energy growth trajectory that China's going through. It can't come from hydro because China's already the world's largest hydro producer because of massive programs during Mao Zedong's era. And hydro is effectively tapped out. And the environmental implications of hydro, the negative implications, are becoming more and more understood. So their only opportunity to replace baseload emissions generating coal with a clean energy source is nuclear energy. And that is their strategy. I'm convinced of that. And I think as we start to see the extent of that deployment over the next 20, 30 years, that will have a corresponding effect on every tiny little corner of this market. And when you start to work through the effect on those tiny little corners, it really keeps you up at night. It's that exciting.
So what's funny is when I almost interrupted you before you made that second point, and my question was going to be to you, how much of a black swan to the market could China be? And then you went into to discuss that. So I thought that was pretty funny. You said, what type of effects could that have on the tiny corners of the market? You know, this is something that I don't think is discussed that much. And I'd love for you to elaborate upon that a little bit more because, you know, in all commodities, right, we're headed into a commodities bull market, and it's what we discuss primarily on this channel. And, you know, one of the things China's genius at is strategy, right? And they know, you know, they're very smart about what they're doing with commodities. And I have to think, although I haven't seen the same type of media coverage in uranium, you know, you're seeing it in a lot of other commodities where they're taking the supply off. They even with grains recently, they made a new demand for how much backstock of grains. So give us an idea in a little bit more depth of what you mean when you say, you know, China's impact is greatly understated and how it might affect keeps me up at night. Give us an idea of this, how much this black swan China could affect the market.
Okay, I'll give you two little pieces of information that I think complete the whole picture. So the first one is China's domestic uranium production is quite low. And they've worked very hard on it over a number of years to try and be domestically insulated from the rest of the world with their uranium and fuel cycle. They've achieved a closed-end nuclear fuel cycle in the industrial aspects, such as conversion and enrichment. And when I say industrial, if you throw enough money at it, you can build another plant that fulfills that industrial requirement of converting uranium or enriching uranium. And they will continue to do that. But uranium mining is not an industrial application, it's a mining application. And if you don't have the resources in acceptable quality and that are accessible and environmentally accessible, you simply can't produce uranium. You have to buy it. And so what that means is that China, unlike in rare earths, for example, China must look abroad 20 years out from its anticipated requirements for uranium to fund this and supply this enormous nuclear build out. And here's the thing, the numbers that I use on China, and these are pretty close to what WNA uses for its upper scenario. By 2040, China will be consuming annually more uranium than all of the uranium that's mined in the world each year today.
Whoa.
So just let that sink in for a moment. And that's in the context of already this sector is positioned for a difficult time with supply, if not a supply crisis, because the investment in both exploration and development of new uranium sources has plummeted over the last 12 years. And that's in the context where uranium mines are not easy things to develop. There's a political overlay, a geopolitics overlay, there's an environmental overlay, and in many markets, including some of the biggest producers of uranium in the world, there's an interest group or an NGO overlay that can really slow things down. So it's not a market where there's a huge array of projects that are just waiting for price so that they can pop up. Price only solves part of the equation for so many of the projects that I'm looking at. So that obviously is going to have a big impact on the way that China starts to approach its procurement of uranium. But it also will have a big impact on how other markets approach their procurement of uranium, because bear in mind the US still is responsible for consuming 25% of the world's uranium. They're not going to be happy about getting squeezed out by China in that situation. Russia's got a huge export program of nuclear power plants, which includes provision of the nuclear fuel and taking the waste away at the end. That's a key geopolitical driver for them. It's been an enormously successful lever geopolitically from Turkey to Egypt to Bangladesh. They're operating in a dozen countries around the world at the moment, using the benefits of nuclear power and their particular all-in solution to achieve diplomatic and bilateral gains. So they're not going to be happy about getting squeezed out from China. And then you've got a multitude of smaller utilities in the EU and other parts of Asia that'll be left fighting for the scraps. So that's what I mean when I say every little corner of this sector is going to be influenced by this China story. And as you say, Jake, the Chinese leadership and Chinese business are masters at thinking the long game. And they've developed that skill probably over a couple of thousand years, but in particular, that skill's become a differentiating factor as us in the West, we seem to be thinking shorter and shorter timeframes, whether it's politically or from a commercial perspective. So they're thinking about that, and their 2040 demand for uranium will need to be addressed in the next few years so that they can feel confident that they can go back to Beijing and say, yes, we do want to build these extra 20 plants in this area, and at least we've got a plan as to where that uranium is going to come from.
Okay, so you got to tell me what on earth happens in a situation like that, because one thing I find really interesting is the uranium thesis is already super bullish. I didn't even really think about China really, especially until in great depth until preparing for this interview with you. But I never crossed my mind when I started getting a significant allocation of my portfolio to uranium, and it never crossed my mind. But as you say that, and as you go more and more into depth, so you said by 2040, all that's produced, which I think tell me it's like 120 million. So they're going to take all of those 120 million or maybe even more. So then what's the effect of that when so many mines aren't even going to come online till 60? Then you're running into a national defense issue with where you would think the Russian government, the Chinese government, and the US government, and any other major powers of nuclear would say, this is coming into a national defense issue. So what happens to that takes the bullish thesis, I think, to another level. What's the result of this thing?
Yeah, so look, it's a function of two questions, really. The first question is, how quickly can market mechanisms respond? And so far, they've done a dismal job, because for something that me sitting in Perth with only limited, I don't have the capacity to even travel to China at the moment. I don't think I'm wrong with this, but the market hasn't responded yet. There's no anticipation of this in pricing at all. And I can tell you, I'm not an island on this view. I'm not a radical. A few years ago, I was one of the only voices talking about this, but now it's well understood. So the market gets 0 out of 10 for preemptive response here, and the price is still going nowhere. So the question becomes, well, over the next 5 to 10 years, what's the market going to do? Mm-hmm. And what that really means is the market will need to respond in a way that incentivizes almost all of the production that is capable of coming online, mm-hmm. all of the producible pounds between now and 2035. And when I say producible pounds, I mean pounds that are technically capable of being produced. They don't have funky metallurgy or unusual mineralogy, etc. Environmentally capable of being produced. They're not sitting, feeding a wetland that goes into an important ecosystem. And politically capable of being produced. You could have the best mine in the world sitting in the state of Queensland of Australia, and there's a uranium mining ban. So that's not going to help the equation at all. So price, in a sense, price will become the simplest lever of all of that to create the supply that needs to come on. So the second question is, in those market circumstances, how is China going to react themselves, and how are they going to precipitate the secondary reaction from other major sources of demand? And China's demonstrated that they're interested in accumulating and building their fuel reserves in really three ways. And it's been referred to inside China as the three-legged stool. So the first leg is domestic production. So they're going flat out, trying whatever they can to expand their uranium reserves, improve their own mining capability, and build up their own domestic production of uranium. And as we've discussed, so far, they're just not particularly blessed, despite being such a big country. They recently announced that they're drilling, I think, a 1,500-metre borehole in one of their projects. You know, that's how keen they are to see what uranium there might be deep down. So the second leg of the stool is to own uranium assets overseas. So the next best thing to having it inside your border is having ownership and control outside of your border. And we saw them start to do this during the last boom with the acquisition of the Husab project in Namibia. And whilst they haven't achieved control, we've seen that they've just recently announced a 49% acquisition of a project in Kazakhstan, the Utlik joint venture. Now, here's the thing. If you run through the largest producers of uranium in the world, only 2 of those jurisdictions permit foreign control of uranium projects.
Wow.
So starting with Kazakhstan, it needs to be a joint venture with Kazatomprom, hence why China's 2 ownership interests there, both held by CGN, are 49% joint ventures. And that comes with a contractual right to the offtake, not a direct access to that offtake. So it's good, but it doesn't fully solve their supply issue. You then move to Canada. So Ottawa has a law that foreign ownership of uranium companies cannot exceed 49%. And the one exception to that rule that was made during the last boom didn't result in the production or the development of that asset when Paladin bought 100% of the Michelin project. So that isn't a good precedent for them reversing that rule. You then move down to the third largest producer, which is Australia. So there's a Foreign Investment Review Board and an act that controls investment into sensitive industries. And in the current and foreseeable political environment, it's a non-starter for Chinese control of uranium production, let alone outright ownership. You then move to the 4th and the 5th largest producers, which is Namibia and Niger, both located in Africa. And they do permit foreign ownership of uranium projects with all of the attendant restrictions and requirements, which are very appropriate to ensure that there isn't an undue environmental and social impact. But you can do it. So as a result, in Namibia, CGN owns 90% of the Husab uranium mine, and CNNC has the controlling interest in the Rossing uranium mine, which they bought off Rio Tinto. And incidentally, CNNC also has 25% of the Langer Heinrich uranium mine. Now, that is vitally important to understand, because outside of those top 5 uranium producers, there's only a small minority of global production. So it's really the top 5 where all the action is. And China only has access to 2 of those markets in terms of ownership and control. And Niger is a little bit more problematic for China because effectively France secures Niger's whole sovereign security apparatus. So China would need to operate in one way or another in consultation and in partnership with France, unless they wanted to take over those responsibilities, those bilateral responsibilities. And then you've got the third leg of the stool, and that's basically accumulating pounds in market and building inventory that way. And China's been doing that opportunistically. They've been a big buyer out of Kazakhstan during the bear market. I think they've played us capitalists like absolute fools during this bear market, and good on them for doing that, because they've soaked up a lot of the inventory. And going back to your very first question, a number of commentators, including some of the better known price commentators, they point to a few 100,000 pounds of inventory held in China, and they go, aha, China's not going to need to buy too much. They've got it completely wrong. That is inventory that's sitting there for a very, 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 very rainy day. But in the meantime, that is purely to serve as providing the confidence that China needs to spend several $100 billion on a nuclear plant rollout. So that inventory isn't going anywhere, and China's still got a lot of buying in the market to do as the third leg of its stool.
Yeah, fascinating stuff. There's a lot of people that are saying now, uranium equities are in trouble if the spot doesn't move soon. But the more you talk to someone like you, the more you say, no, 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 no. You're really not grasping this. So I guess in a quick question here, does China know this? Are they aware of when you say by 2040 they're going to take up all the mine supply? Are they aware of all of this? Whereas I would say the United States government is they're going to get hit blindsided. But I would think China would be someone that knows. Do they know this?
Yeah, of course they do. But not everyone in China knows this, if I can put it that way. So not everyone who works for a Chinese utility who attends the conferences either knows this or is at liberty to talk about this. But it's very well understood. When I first started working in this sector, one of the facts that I was told that created the biggest impression on me about China, and we're going back now to 2016.
Okay.
Not when I first started working in the sector, but when I first took on the job as CEO of Bannerman. And it was explained to me that President Xi in China had 2 inboxes on his desk that were cleared every single day. And they related to strategic export ambitions of China. And one was high-speed rail transport. And we've seen that develop since 2016. We've seen an enormous construction program in China that just absolutely dwarfs what the EU is attempting to do. But also we're seeing the rollout of that as one of the very key infrastructure arteries within the Belt and Road Initiative. And then the other inbox was the export of nuclear power plants. And I tracked that. And I don't know if that was a literal example or a metaphorical example, but I tracked that. And it's absolutely played out in so many different ways as I look at the way that China's implementing this strategy. And so, yeah, I'm not saying that they will consume all of the pounds that are mined in 2040. What I'm saying is, if the market is only producing what it's producing now in 2040, well, they're gonna have to buy all of that. And obviously that's not going to happen. So hence the questions. But it means that market response that we've talked about is going to have to happen.
So you paint a pretty clear picture of the demand side and really you said basically everything that is mineable will need to be mineable. I have to imagine then you're in the camp of thinking that there's a good chance that spot overshoots last time due to the increased amount of demand. What's your thoughts on where it can go? I've heard people like Rick Rule that, he says, look, I'm so spoiled off what happened last time. I can't say I think it'll overshoot, but the more I've studied people like yourself that have really done the work on the demand side at the deepest level, it seems pretty bullish. So where do you stand on, based off of all your research on demand over up to 2040, of what is needed from the spot to bring all this online, and where do you think it can go?
Yeah, look, the first thing I'd say, Jake, is that whilst skyrocketing spot prices are really exciting for investors who've got liquid positions in stock and they can imagine what stock price they're going to be able to sell for, from inside the industry, that's not a good thing. Dramatic overshoots are not helpful. What they end up doing, as we saw last time, is they create a lot of congestion in the sector. It becomes exceedingly difficult for uranium investors to pick the winners from the losers. You see a huge raft. Last time we saw 500 uranium companies listed. I remember companies that just simply changed their name to include the word uranium or put a U in their ticker would double, sometimes triple. So a super frothy spot price environment is not actually a good thing for this sector. It also creates a lot of fear that has negative ramifications when you look at the way that the whole market operates on the inside. So let's be clear, my dream is not waking up to an overshot spot price. And then the other thing is, it's not the spot price that determines the financing and therefore ultimately the construction of new uranium mines. It's a term contract price. And what we want to see and what we need to see is a sustained increase in the term contract price. And certainly it's my belief that that term contract price needs to go well north of $65. And I'm very comfortable standing behind a $75 sustainable longer term contracting price if we've got any hope as an industry of meeting the type of demand requirements that I've just described and articulated as my belief.
Okay, so maybe by then we'll change the Bannerman name to Boon or Moon. So we'll have the double U's in there. So fascinating conversation. I mean, I'm looking at the clock. I mean, you're such a. We'll have to have you back on. For everyone listening, leave a comment down below if you want to have Brandon back on. Any other questions you have. But I want to give you the floor to talk about Bannerman. You know, your what you got going on. Like I told you, I'm an investor in Bannerman. Give us an idea. You know, you obviously painted a great macro, but I want to give you the floor to talk about your company as well.
We've been around since 2006, and throughout that period, we've been a uranium-focused company developing the Etango uranium project in Namibia. And what's, I think, becomes so special about Etango and all of those years of development have really focused on one point, which is we can produce producible pounds by 2025. And we can do that via two alternative development routes. The first one is we produced a definitive feasibility study originally back in 2012, which we restated in 2015 for a very large project development of Etango. And I'd encourage people to go to our website to get the detailed information and also read all of the disclaimers and so on. But in essence, that development project would produce on average 7.2 million pounds of uranium per annum. And that's enough to fuel 17 nuclear power reactors, conventional 1 gigabyte nuclear power reactors. So that's would have a tremendous appeal to a utility or a country that's looking to underwrite large-scale nuclear development. And we have the environmental approvals for that project. We're in Namibia, which is a dream destination for developing uranium. I lived there for 6 years, so I can tell you that the environment and the social setup is extremely supportive of uranium, something that you certainly don't experience in Australia, for example. And it's just a great place to develop a uranium project. And I would argue the premier country in the world for that undertaking. Now, what we've also done more recently, and this has really been a game changer for our company and the types of investors who are now attracted into Bannerman, is we've developed a smaller version that is really an alternative or parallel development process. And we've called that Etango 8. And the 8 refers to the fact that we're looking at 8 million tonnes per annum throughput. In other words, that is processed by the processing facility or the mill. Now, rather than the 7.2 million pounds that I just talked about, Etango 8 is scheduled to produce an average of 3.5 million pounds per annum. So enough for 6 or 7 nuclear power plants. And what that then, or 7 or 8 nuclear power plants. Now, what that means is that we can get into production sooner with a less aggressive market signal at a lower capital cost, with lower with lower cash costs. And from there, once we're in production and once we're profitable, we can then consider scaling it up, if need be, to the originally anticipated output. And so we've designed this processing plant and all of the associated infrastructure so that you can basically layer in an additional module or another train to enable us to achieve the type of expansion that the market calls for. And when you start looking at the demand supply dynamics, we'll be in quite a serious deficit in this market by 2025. And that deficit really gaps out by 2028. In other words, about the time that we would be looking at financing a development that expands our production. So we've got something unique. We've effectively got three alternatives: the very large, the Etango 8, and then something in between by virtue of an expansion over time. That gives us a lot of flexibility, and being in Namibia, it certainly means that that's a realistic development proposition, given we have our environmental approvals and the social permitting's very supportive. And our economics are robust. We don't claim to be lowest tier cost producer. We'll leave that to the Kazakhs. But in the meantime, because of the very low risk profile, both politically and technically, we're something of a sure bet as far as these things can ever go in mining and as far as it can ever go in uranium. And that risk profile is relevant for both investors, but it's also very relevant for utilities, end users, and certainly sovereigns who are interested in knowing before they commit a couple of $100 billion to developing a nuclear power plant infrastructure, that they can secure the uranium, either as an offtake partner or as some sort of development partner.
So what does this do to Bannerman is what it's a for someone that's used to investing in SP 500 traded stocks, it's a penny stock. I mean, it was 8 cents day before yesterday, 10 cents, but you're such companies like yours are such an important component for us to have electricity and do this. And so it's amazing to me how something like that can trade so small. But my question, I guess, is what does this do to a stock like yours if, or when rather, it seems like more of a absolute, when we get $60, $70, $7,500 uranium and it's 2024, 2025, you say you guys come online in 2025, all fingers crossed. And you said that the market's in a big deficit by then. What happens to a 10 cent producing uranium mine?
Yeah, well, that's a crystal ball that I prefer not to look in for a whole lot of regulatory reasons. But what you're really articulating very well, Jake, is the leverage thesis. And going back to the beginning of this show, in a large number of investors that choose Bannerman either as their only uranium investment or as an important part of their portfolio are looking for two things. The first one is the risk profile. So as I said, we're a low technical risk project. We don't have the environmental and social and permitting risks that many projects do. And we've spent all of the money. Like, there's not a lot of money left to be spent on this project because we've done so much over the last 15 years. So the risk is low. So it's got that asymmetrical element, just like the uranium sector. And then the other one is what you just talked about, leverage. And it's a case of looking at what do those scenarios do for the NPV of our project, either the Etango 8 project or the original Etango project. And we've put out some decks in the past about that. It's now a little bit difficult in a regulatory sense to talk too much about what those NPVs will be. But for example, the NPV after tax of our Etango 8 project at $65, we've disclosed that as $212 million US. However, as you go to $75, that starts to really leverage up to an NPV more than $350 million US. And as you start going above $75, of course, it's pure cream because it goes straight to the bottom line. And those are after-tax numbers as well. Now, if we're facing that environment by the time it comes to financing, well, we'd have to have a really serious look at the larger project, the originally anticipated Etango. And when we put out some numbers back in 2015, the NPV based on a $75 uranium price was $419 million US post-tax. And those numbers have got considerably better because of the work that we've done in the meantime. And they just start getting silly when you put in numbers that we saw during the last boom. So if you put in, say, a $95 term price, which is what we saw for 8 or 9 months during the last boom, then you're looking at Australian dollars, a couple of billion in terms of NPV for the larger project. So that's the leverage that many investors are looking for. And they like the fact that it's got that extraordinary upside leverage, but with a very constrained downside risk profile because of all the reasons that I've talked about. And what's interesting is it's kind of the perfect fit, because many investors come to uranium in the first place because of that asymmetrical risk profile. You know, it's really hard to see uranium going to $15, but it's real easy to see uranium going to $60. And so there's that asymmetrical draw card that brings investors into the uranium sector in the first place. And I'd argue that we are the premier asymmetrical risk profile within that sector once you've started diving down at a stock by stock level.
Good stuff. Good stuff. All right. So I'm looking at the time. I'd love to have you back on, you know, and we'll chit chat some more. Everyone leave a comment down below if you want to see Brandon back on. Obviously he's kind of a wealth of information in the uranium sector, and hit the like button on both sides. I got it. We're gonna have to bring you back on and talk more. But I got to ask too, because one of the things that's interesting about Brandon is, or that I found interesting about Brandon is, you know, my whole background and my whole business the last 10 years has been in the personal development industry. And, one of the things that I found really interesting about you was, you know, your own research and study into the personal development industry and your own philosophies of success. And I always like to, I wish you didn't have so many good things to say, because this is such a, I hate to shrink this part so much, but so we'll have to do another one. But you got to give me an idea of what you believe is some of the cornerstones of success in your financial life and your businesses, the things that you've learned from your own studies, from your own real world experience that can, you know, be enlightening for us to get to know you more, but also be very helpful for a viewer, right? Because at the end of the day, you know, we talk a lot about macro, we talk a lot about different types of commodities and investments and whatnot. But what I really want to do is make people watch these videos and realize, yeah, you know, I can double my income, I can double my net worth, increase my freedom, all these things that I think are so important. So you got to give us an idea of some of these types of philosophies that have been very important to your success.
Okay, well, let's start with one, and we can unpeel the others at another time. And perhaps then we can talk about what success really means, because that's a really important starting point. Look, one thing that has really worked for me, Jake, is over the last 20, 30 years, I decided to invest in myself first. And what I mean by that is, like, at an early stage in my career, even while I was at university, for me, that meant investing in skills. For many people, it's investing in knowledge. In my case, I went down the path of investing in skills. And so some of those skills really still serve me today. Some of them were sort of education-based, but for the most part, they were real-life skills that came from public speaking, writing, traveling, like in the days when you could backpack without the internet and actually figure stuff out for yourself and get caught in a terrible situation and have to work out how the hell you were going to get out of it because you had no money and, you know, your mate's passport had been nicked and all that sort of stuff. So developing skills in that early phase was really super important for me. And I did that quite tactically as well. I cycled through a few different industries, starting with law, and that's where I really got my foundation as an M&A lawyer. But then I went into funds management. I spent some time in private equity. I spent some time as an entrepreneur, both in Australia and overseas. As I said, I spent some time in renewable energy and really tried to accumulate a range of skills that could then make me a little bit dangerous in the corporate world. Then what I found is the focus, certainly over the last 10 years for me, has been less about skills and more about thinking. And I think once you're kind of in that executive realm, finding highly skilled competitors running other companies or competitors, for example, inside a larger organization, if that's where you're at, they're pretty easy to come by. You know, there's lots of people who've really invested in their own skills or been through great programs or are just naturally talented, but there's still a lot of space to differentiate yourself when it comes to the way that you think and the quality of your thinking and understanding how to get the best out of your own thinking. And that's a discipline. You know, for some people, it does come a little bit naturally in terms of creativity, but there's no doubt that there's quite a lot of science that you can apply to improve the quality of your thinking and, more importantly, the impact of your thinking. And that's kind of where those two things have come together. A lot of the time that I spent 20 years ago really working on my communication skills and my ability to write, for example, now gives me the capacity to express myself when it comes to some thoughts that I think are adding value to whether it's a sector or your audience or my daughters or whatever it might be. And so that's what I'd say. I invested in myself first. And I think in a broad sense, I've applied the idea that the first third of your professional life is about developing yourself. The second third is about making money. And then I'm looking forward to the last third, which is about spending that money on other people in society. So let's see how far we get on that one. I think we're kind of in the early stages of this, the middle third on that one.
I like that. All right. So there's a quote by Earl Nightingale, and he says 1% of people think, 2% think they think. And he said 97% would rather die than think. And I thought of it while you were talking there. So give us an idea for someone, because that's a pretty interesting point. I've never heard someone say that when I've asked people in my interviews, because we're in such a muddied world, right? Like there's so much fear and anxiety. And before even 2020 happened, I mean, the amount of emotional and stress and disorders like that, they're at record highs, right? And then you add on top concerns about, you know, how many people have lost their jobs this year, concerns about people's businesses going under, and just general concerns about the future social and economic orders of our world. So there's a lot of volume outside, right? And so how are you able to think clearly when there's so much volume and noise?
I'm fortunate, I think, in terms of that aspect comes fairly naturally to me. I'm going to go back about 15 years, and I did an exercise with one of the greatest thinkers that I know, who's a long-term friend and a real mentor of mine, a futurist called Gihan Pereira. And, you know, people should definitely look him up. He's amazing. And so we did an exercise which was really about defining what he had a word for it, but essentially it was a key selling proposition as me as an individual. And it was being able to operate within chaos and able to think clearly within chaos. And for many people, that's seen as a negative because, oh my goodness, what are you doing surrounding yourself with all this chaos? And I must admit, I did have a few points that I needed to address in an organizational sense in my life. So let's just say I had more practice than I really should have. But the point was that that was defined for me as a strength, something to be really worked with. And I've seen that as a blessing rather than a disadvantage over a long period of time because of that. And like my wife, it drives her nuts because, you know, we've got young daughters and everything can be going wrong in the household sense. And, you know, we're running late and someone has to go to the toilet and all of that sort of stuff that you get with young kids. And I can be multitasking and having a conversation with someone about what's going on at work without skipping a beat. And she hates me for it. So anyway, so there are downsides to it, but that came naturally to me, I think, and something that I've been able to develop, which has helped. For other people and something that they can apply in the way that I've tried to enhance that strength, I think one of the biggest lessons that I've had in more recent times is the value of meditation and the value of meditation as an enabler for clear thinking. And it can be really tough. And when there's a lot of distractions out there, it's obviously harder. But that practice of being able to screen out and filter out all of the various forms of noise to actually think about something, it's certainly benefited me at a personal level, but it's something that I will do as a precursor to deep thinking about certain issues.
Very interesting. I would love to spend a whole hour just talking like this with you. You know, when we were talking before, and the other thing that I think, you know, this last part is it's a differentiator. You know, I mean, everyone says you should invest in people in commodities because it's such a volatile industry. And when you and I were talking on email and you were telling me some of these things, I was like, wow, I like this guy 100 times more than I did before, because you know, you're picking someone to choose where to put your money with. And, you know, such an undervalued component is all of these things. And so I think that it's a really interesting thing. My channel sponsor here, Vizsla Silver, another guy, same way, into all the same stuff. And I think it's a rarity, but it's a very interesting thing. And so I'd love to discuss that more with you. I guess my last question would be for someone that says, well, sounds interesting. And I always thought of meditation as an abstract spiritual thing, but you're saying it's helped you think clearly on your incredible amount of research into uranium and formulating ideas. And if I said, well, I mean, maybe I'll do it for a couple minutes before I work tomorrow. Do you have a regimen? Do you just kind of sit down and focus on your breath to kind of still your mind and get it directed to the most important areas of your life? What do you do?
Yeah, there's lots of different tools, and let's get it straight. I'm not an expert on meditation. I struggle as much as the next person, and I do use it as a tool rather than as a spiritual connection, which has got a lot of value for some people. It's just not my go-to. Look, what I'd suggest is there's a great way for people introducing it into their working life. And if there's an app that's free called Insight Timer, and they've got a whole range of different meditation programs. And there's one in particular, and I'll shoot it to you so you can put it in the show notes, which is basically a 40-day at-work mindfulness program. That's free, and look, it's awesome. And it's a great way for people who maybe are a bit put off by the mumbo jumbo spiritual side of things, who would never have identified with meditation as a work tool. Awesome way just to get into it. And they've got lots of techniques, just like what you were asking about, how to prime for an important meeting, how to settle down after some distressing news, et cetera, et cetera.
Interesting stuff. All right. So for everyone listening, give us a comment down below if you want to have Brandon back on. Really, really, really interesting stuff, especially got me even more. I think I need to go click some more buttons and buy some more uranium stocks after today. So yeah, thank you very much for your time. In the link down below for everyone listening, we'll have Bannerman website. I'll put Brandon's Twitter account as well for you to do your own research and check into Brandon and Bannerman in a little bit more details. Want to encourage everyone to hit the like button on either side to send this out to more and more people. And Brandon, any final thoughts? Otherwise, thank you very much.
Yeah, look, thanks, Jack. I love what you're doing, and my wife and I watch your main podcast and really enjoy your philosophies on things, as we've talked about. So great stuff. Love to be on the show. Thank you.
Yeah, awesome, Brandon. It was a pleasure to have you on. So for everyone listening, give us a comment down below. Let us know your uranium price prediction for 2021 in the comments down below. And we got to ask one final question to Brandon. Uranium price prediction by the end of 2021.
So do you want it in a band or do you want an exact number? Because you won't get the second one, because I've hung myself doing that in the past.
All right, give me a band then.
Yeah, so look, I think we need to be looking at the $40 to $45 band. That's when you work backwards from 2025, we're going to need to be in that band. Not saying it won't overshoot, not ruling out the scenario that it gets sluggish in the meantime, which will present a fabulous buying opportunity. But that's where I think it needs to be by the end of the year for us to be set up for a term contracting process that actually puts pounds in the can and rods in the reactor when they're needed in 2025.
Beautiful. All right, for everyone, give us your uranium price prediction in the comments down below. And thank you for joining us, Brandon.
It's a pleasure. Thanks, Jake.